A gracious good morning to our Biz 45, Amber. We have Amber, Diamond, and several other Ruby Universe participants in our chat and have joined us to help with feedback for the Topaz Decision One. This is our Topaz group of three teams, three partnerships actually in this case. And this is a recap of their first decision in Biz 45, the Harvard GCU simulation of the auto industry, where each member gets to run their own company. I'm here with Jingo the Parrot, who's going to probably squawk in the background. You'll hear him from time to time. We'll jump right into this. This is, we're streaming this morning to give a recap on kind of what happened in the first decision, why it happened, and help you before you start decision two with your simulation. Now, as model simulations go, this is one of the most complex of 255 at Harvard, and it's very close to the real market responses to running a company. That's why thousands of executives take it every year for a 2 to 3 week period on a retreat. It's given at hundreds and hundreds of Ivy League and other colleges. And it's a great learning experience if you put the effort in. The return on investment's got to do with the investment. So the amount of time you put into this is what you'll get back out of it by the end of the course. The key is to watch the other videos, to download the cheat sheets, the student cheat sheets, and read them very carefully. We've got videos that were done by Mega Sim itself, and you like my big giant cursor there. This is to help you see the pieces as we go through the financials. But generally, if you look at the videos that are on our course lead, Professor Paul, and my site at Model Sim Professor on YouTube, and then the ones created by Harvard and the group that created the sim, you'll get a real good feel for it. And there are a lot of downloads. There's a couple in particular I'll show you when we jump on. So without further ado, let's jump right into, I'm going to get our screen sharing going, get our whiteboard going a little. And in the chat, we'll be getting questions from a couple current students and also some former, our winner circle folks that have done fantastic on the sim, moved on in their careers and are doing really, and you know, you're going to get at the end of the sim, you'll get a recommendation letter if you want it on the sim. And that's really important as you go forward in your careers, because I found it to be, even from, you can see I'm ancient from years and years ago, it's been very, very helpful. So without further ado, share screen. Let's go with entire screen. Okay, this is our landing page for biz45.com. You know where to go when you need to see it. We've got our menu here of lots of things that you should watch before the next decision, including our famous two-bird sim on how you actually do make decisions, the ACE, the sim in the class, which is really important because it's got many tips. We'll take a little peek at it later. Our videos, and then the most important thing with lost orders over inventory, as we'll see, is the capacity gears and hints in terms of setting your plant capacity. That's always something everyone makes a mistake on the maybe first two decisions even, because it takes a lot of work to figure out the financials and the metrics behind that. But for today, the most important thing is your link here, Topaz Universe. You will be going here, check out the recap yourself. There will be some slides you can take a look at, and I'm giving you a lot more slides because these go into your final report. It's real important for all the rest of the course parameters that you get these financials and that you get these graphs and graphics, and you'll see that they grow as we go along with all 5 of the decisions, or 8 of the decisions if you're in the 15-week course. Then there's a very important video that everyone needs to watch, everyone in class, and that's 100 slides in under 30 minutes. Put this on our YouTube channel. It's on your recap here, so you can find it. Also, there's a before decision 2 video, and this video is also on it that I'm making now. So if you want to refer to your team to it and where they find it, all 3 of these are really important. This one's short. It takes you through all of the 100 slides that are really the key to this sim and how it works. But to get started, let's look at the initial results from this last decision. And you can see that yellow team is the winner, blue is in the center, and red is third. Now, what happens through all these is you'll see sine curves going up and down with the positions. We're just off of only the initial decision here. The initial decision is a turnaround. It's a company that's not giving positive retained earnings, EBITDA, or ROCE or ROS, return on capital employed. None of that's happening. So it's very difficult to bring it into positive financial territory, even through the five decisions, but many teams do. So we'll see what happened here with the three teams. Why are they ranked the way they are? But one of the important things to remember is that if you look at the rankings, the no one gets 100% or rarely. Some teams build a flywheel and end up with all ones here, which is impressive. But one, two, and three are the positions. You can see that blue team came in, even though they didn't come in first, like in overall indicators, because they weight the financial indicators more. You can see that in three of the places, employee morale, revenue, and CO2 emissions, blue team did great. And red team did also excellent. Many a solid number two in many positions. And of course, yellow had the number one position in gross and retained earnings, which always give you number one, as well as share value. So they really emphasized what's important as you go through the sim, which is the financials. What's my unit cost compared to my profitability? How do I manage those numbers with supply and demand? And those key issues for becoming number one in any business, which is initially an economic and financial success. So red team had a problem with cash. They were able to validate the sim, and we did some communication back for. Yes, okay. My chat's already saying, tell me about blue. We've got some blue people here that are very anxious to see what happened, because what happened is the blue team was unable to validate initially. So I had to jump in. I didn't touch any sliders, but we did discuss it and go through. And I will do that step by step. You just have to text me, call me, and I'm happy to jump in with you. I just can't prefer one team over the other, but I will do it with all three of you if you ask me. Yellow obviously didn't. They only had a few questions. They didn't need to ask me. They did wonderfully. Blue blew the blue their cash initially, because they did all the sliders, did engineering, but didn't look at the cash as they did. You have to toggle back and forth when you make the decisions. Do your engineering sliders, look at what happens with CapEx, which is your supply of that engineering demand. The CapEx drives that, or your planned investment, your planned capacity investment. Go back and forth, but then look at your budget on that square in terms of the individual lines, but then look at the corporate budgets and go to the very bottom and keep looking at what's going on with your cash. You need to see, what is the return on investment? Is my cash doing okay? And you're predicting what revenues are going to come in because you have a demand function you're building. So this first decision, this is the first, there's three levels of this sim. One is ready, fire, aim, which is trial and error. That's what this is. You have no feedback. You didn't see the white market curve. Um, the white market curve is very important, and you'll see how that works in the future, because you had no white market curve. You will have white market curve in the future that shows you in all the rest of these. When you go into the next decision here, starting this is Sunday, Monday, when you start to make the second decision, you'll see that white market curve. And if you're in trouble, just follow it. Just try to keep up with, you don't want to have all lagging indicators, but you want to see the direction it goes. And below it are the sliders. And, we can take a brief look at it, but the I'll have a much better detailed recap when it starts to work in the second decision. This first one is really, ready, fire, aim. And the second one, if you get very quantitative, look at the numbers, look at the market response. How did the customers respond to your engineering and marketing? What did your competitors do, and who's going after which market in the portfolio? Then you'll have the white market line, and then you can do ready, fire, aim. You can or ready, aim, fire. You can actually not just do trial and error, do random movements, move the slide, see what happens. You'll actually being in the second stage. The third stage, towards the last decision, if you put the time in, if you watch the videos, you do the slides, you will find that by the fifth decision, by the last decision, you've got a flywheel, you're doing really well, and you've got the economic side of it. You're looking at the unit cost. you're looking at how does it apply to a market, a blue ocean market strategy that allows you to get the benefit of your R&D and your marketing and your engineering decisions spread over a larger installed base because you're getting economies of scale and economies of scope within the portfolio. Now, everyone understands economies of scale. You got to get more orders, more revenue, and do well in that line. But scope is important too because this is a portfolio of four units, business units. You're each CEOs of a couple of units here. So you have to see what's going on. What did I invest in? And sometimes you can't be everything for everyone. There's a lot of the videos that warn before decision one. And I know we're all busy working people. So got our day jobs. And so we don't necessarily have the time to review the cheat sheets and buy the first decision, all the videos. But throughout the videos, they're saying don't make big changes in the slider, make small nuanced changes. Don't put a whole lot of early money into low cost and eco because those are future lines. The two cash cows are, we'll see more about that, but the two cash cows are family and image, and that's where we do better initially. But if we took too much money and the other ones too early, we crash and burn with those. So I have to be very careful. Now, this is our major EBIT exhibit, and we can see everybody's below water, which is typical for a turnaround. But we can see who got killed and who are the winners and losers in terms of each lines. We've got, low cost family, eco, and image. So those are kind of the major indicators of EBIT that show how each team did and why. We can see blue team, which happens a lot, crashed and burned in eco. And when they couldn't validate, we called, I went through some of the sliders. I didn't tell them what to do, but I gave them some examples of how they can back off of the cash so they didn't end up in a negative position with cash. Because when you end up with negative cash, you either have to take out a loan or you have to change the sliders almost randomly to back out so you're back at zero cash. So to give you an example, both blue and yellow team ended up okay on cash here. The team that crashed and burned on cash, even though they validated and they had good cash left, a year later, by the time the sim ran and all the results came in, they spent too much compared to what revenues came in, and they did not match supply and demand. So red team did end up with this $19,000 number here, and that's a trigger when you see 19,000 here, and the others are 24, 25,000. That they had to take a government loan. So they ran out of cash in the middle of the sim. So I had asked each one of you to borrow that $2,000. We did put it in the corporate budget to have a buffer so you wouldn't go under and the sim would stop. That did indeed happen, but you can see there's an additional, 1340 that the government had to give to Red Team because they did run out of cash in the middle of the sim. And the reason that happens is if you invest a lot in engineering one line, and you can see, Red did not too bad. They did really well in low cost. They were the leader. But they successfully lost more cash in the other three lines, mostly because of lost orders over inventory, which we'll show you. Where they had trouble is that they had good marketing, got the demand going, but couldn't supply it. And this happens a lot. Now you can see blue. Chad keeps wanting to know tell me what happened. The reason blue crashed so much is because we had to back off the sliders and there was a lot of seen lost orders over inventory. We'll compare these numbers to what happened with supply and demand. That's really the key of this first decision is supply and demand. So you have these, look over these, check out the financials so you see what to do. Decision two. This is just give you an idea to start out. You can see that in eco-friendly, blue did really great. And the chat's saying, well, what is lost order or inventory? We'll get to that. The orders here, you can see that, okay, we have a lot of orders, which means we put in a lot of marketing and a lot of engineering into our cars. But you can see, even though the other two teams don't have yellows Yellow did really good because they stayed close to, but are you better or worse than the previous decision? That's another thing we have to look at. This is the losing previous decision of a company going under, and did we make it better? Well, we certainly made it better in blue with orders, but were we able to sell what were ordered? And sales in the U.S. accounting system is deliveries. Same thing. You book your sale when it's delivered. So we could just call it deliveries, not even sales. Did you meet the deliveries of all these sales? No, where Blue had trouble, and you can see on if you look at back at the EBIT, they were worst in EBIT in or second well they were worst of the three teams, but their second worst performance was in eco, and it's very traditional now. In a lot of the videos I warn everybody, don't put all your eggs into um eco and low cost initially. So I jumped immediately to eco and blue here because this is where blue really died, is in under eco-friendly. And you will see in the lost orders over inventory that they made a major play for eco and a major play in their portfolio. Whereas everybody did okay. Only yellow really won in image and family. And because those are the two lines, the videos all say to start with those two lines and then move your portfolio to the other two. I know it's an early, everyone's working, it's early time. Many people didn't look at the cheat sheets yet. They didn't watch the videos. It's obvious because it says don't, three of the big, there's a video that's called Don't Crash and Burn Why, and that's in the Mouse and Professor YouTube. You can watch that. The other one we'll see soon, right here in a minute, is how do you follow the white market line and what do you do positively to make it happen? So just real quickly running through family that you were wondering why did red come in last? Because the from the as it better worse in terms of where they were. Family's the major cash cow, and red crashed and burned in family because they actually blue and yellow did do well in family. They didn't jump up above positive EBIT or ROS, but they did real well, which is why they're number one and number two in the most important growth, the two growth lines, which are family and image initially for the first few decisions. By decisions three and four, eco and eco and low cost come into their own. However, remember the market isn't the same in every sim. If you're all going after eco and family, it'll get a lot more growth than in any other universe because you've invested in it and it responds to that responds to investments in engineering and all that. So the more you go after it, the better. I've had teams that built flywheels and image and that's all they did and they just took it all away. They just walked away. They closed the plants and all the others kept the minimum plant capacity investment to keep the employees happy like Blue did and then really went all out in image and family. So the others are not, this image, obviously, you can see, are you better or worse? And who did well? The In terms of better or worse of orders, uh, blue did better, yellow had mild improvement, and red, you know, had an issue. So those follow very closely to yellow being moderate, but also matching supply and demand of lost over inventory, and blue not doing as bad, but red having the biggest problem there in image. So let's hop over to the final low cost, which is where blue coincidentally had the best gain in orders, but again, the worst financials because they didn't meet any of those. You'll see in lost orders over inventory, they'll say they weren't building inventory, they were losing orders. They're getting all these orders, they spent all that money in marketing, but could not fulfill the demand. And this is true of all three teams, and it happens a lot in decision one. Nobody hardly touched plant capacity. They didn't realize that demand has to drive capacity. It's in every single video, and it's on this site, which you'll see under, if you look under more, you'll see under capacity gears and hints. Under that tab, it shows exactly what you have to do with CapEx. Here's your demand function. Where's my supply function? Where do I put money in the boxes and how much to the penny, how much do I need to put in there? So that's important. So now we're into exactly what I'm talking about, lost over inventory. And there's a graphic we'll show you that back. Let's see. We're on 8. Let's see where are we at there? This is basically, we'll go back to that, but this is the whole idea of lost orders over inventory is that these are your orders and these are your sales. These are lost orders. So this is one of the graphs like we're looking at in slide 8 here right now, which is why is there a big gap here? And how do these lines of LOI work? Well, you can see that in data visualization, the numerator and denominator in the graph are switched. So if it's lost orders over inventory, which is exactly the index, it's indexed at 0 across here. So the closer you are to being flat, that means you're balancing, you don't have any gap here. So when we look at this, this is a very important thing to analyze every decision because you're saying, oh my goodness, look what happened in this case, purple team. They went really high. This is a whole bunch of inventory build. Now nobody, but this is towards the end of the sim, obviously, but so nobody went way down into lost orders that blue did this time. But the you want to stay at 0. You want your orders to match your sales. You want to get a lot of orders, but be able to fulfill every single one of them with your plant capacity. So when you'll see this is actually this slide is on in large form is on the uh, this bottom tab, which is capacity gears and hints. You can see that there and how this exactly works financially in terms of balancing supply and demand. And also then how do you relate this to your CapEx decisions? So back to the real thing. Um, this is LOI for eco-friendly. And I started with eco-friendly because Blue had a huge problem in eco-friendly. And the other two teams didn't do too bad. They, of course, were underwater, and eco, everyone gets killed on financially at first because you're putting a bunch of money into something that's not growing and not bringing it back until third period decision. But what you want to see is 0 down here. You want to see all 3 teams close to 0, which means their supply and demand are matched. They're not getting a whole bunch of lost orders because you don't have capacity and you're not building a whole bunch of inventory. You can see that the starting point here is not at 0. So you were left with a situation where there was a lot of inventory and not a lot of sales. Your starting point above 0 is excess inventory, below is lost orders. So you want to see a straight line across there, which you almost do on some of the teams when they learn how to balance CapEx. Now, when you do engineering and you're doing marketing and you're building that, CapEx also changes. Those sliders change your CapEx to an extent, but not enough to cover depreciation of the plant, not enough to cover future orders. So you have to look at the budget and the demand in the future and say, what capacity do I have to build for that? And we can see some of the capacity boxes later. But this is a real explanation of why did Blue crash and burn so badly in eco. 2 things going against them, the portfolio approach as well as the lost orders. Now we switch this, and what happened to red? Why did red come in last? This is very, very telling because they went for it big time in family, and yet they built a huge amount of inventory. So they did, since none of the teams really had time or looked at or watched the videos, everyone's very busy for the first decision and have no idea what's going to happen here. It happens every first decision. Basically, red team did not match this great engineering and marketing they did in family, which would made them huge profit to the supply side. They didn't have the plant capacity there to cover this. So they have a huge amount of inventory building. And yet, if you look at the marketing in the family line, the family needs more dealerships. I'm not going to talk about individual sliders. You'll see in the white line how that works, and we'll have that in all future videos. Right now, there is none. The white line is just starting to come into its own because it'll show you what the market's doing. And let's say you crash and burn and you just don't have time. You're really busy. You have a family emergency and you meet with your team, you talk to your partner, you work on it. Please don't skip a meeting. That's absolutely suicide in this class. But if you actually, because you grade each other and your grade, everything else in the future depends on the sim. So make sure you make the meeting. But let's say you really can't figure it out. You're not a quant. You slept through finance. You're not going to go to the step of doing economic demand functions. You don't even know how to do them because it's a lot of calculus. You can still do fantastic by following the white market line. That's kind of the cheat. It's in all the student cheat sheets. I'm going to show them shots of it, screenshots of it. Take a picture and hold it because in your final paper, where all the grades in this class are really end weighted. You can have an F in the class for three-quarters of the class and get an A. That's how crazy it is because the sim is so important. And all the things that you do in every decision build into what you put into other papers and everything else in the course. Your participation, your discussion questions, everything ties back to the sim. And it's being handed to you like really on a silver platter here. It's for working adults. And I know you're busy. So all these graphics you're going to get in every period on this site here, you can use in your final paper. The teams can collaborate. You can collaborate with each other and build together the paper, just work together, become good teammates. And you'll see the course is a lot easier. It looks hugely overwhelming with all the DQs and all that. But please, please put the sim into your DQs, put them into your participation. All you need is a couple sentences. We've been relieved of the whole APA. Scholarship is important, but this is a practical business course where you're running a business. And it's cases. I'm all for cases. I'm all for APA sites and scholarship. I've got two doctorates I've worked on, PhD and DBA, and have a third one going in education at Purdue. So I know the whole, I'm a student too. I know what it's like, even at this ancient age. So I know it's like to have to get the DQs done, have to participate, 6 times a week. But I'm giving you a lot of questions between the devotionals, of course, which are optional, the ABCs, the ARRQs, and my response is just respond to what I'm saying with a couple sentences and then really put your participation into the sim and you'll do fantastic. So anyway, that's what happened in family with Red building a huge amount of inventory. Now let's look at image, our other really high cash, um, where you should be making a huge amount of money. The only money made, the only EBIT that came back in this entire sim run of any team was one bar, if you remember the bars, one bar. Let's see, this is 10. Where was our bar? This bar. The only positive was that yellow bar. Remember, everything else was underwater. Let's go back to this. What's lost orders over inventory got to do with EBIT? Everything. Remember the sim started up here? We've got to compress now. It's a little closer to zero because the index have changed and because we had to accommodate this huge red buildup in inventory. So again, if you look at yellow, blue, red, what happened? Yellow is absolutely, I'd expect to see this by the end of the sim. But image, they did fantastic. They had the capacity. They didn't do a lot in image in terms of capacity because the capacity was already there. And yet the tweaks they made and the amount of marketing engineering they did really matched supply and demand. And that's why they made money this period. So it's so important that you do balance these out. I have to say, I don't want to be unfair. It's unusual to have this early. Usually there is some lost orders, etc. And Yellow did great. I mean, hats off. They came in first, and this one slide is the reason they mostly did because they built it in a portfolio item that's high up on the list, which is image, a growing, you know, one of the only few positive growths. The other two are stars. These are our stars, our cash cow and our if you look at let's see, so they change places. So portfolio management is about time series. What happens over time? It's just like pricing derivatives. What happens over time? It's not just a static thing. The portfolio changes and you have to keep up with the market as it changes also. So, all right, let's get back here. Where are we? Lost over engine inventory image. Let's jump away from image where they did great to look at low cost. Low cost again is one of our tough, tough decisions, and everybody did kind of okay. Red didn't build up as much in inventory. They did okay. Yellow was okay, but they had some lost orders. They didn't do a lot of production work and low cost. But blue, again, these are the two where blue really kind of crashed and burned. If you'll remember, let's see, 11, let's go back to 3. You can see here, blue did worse, not as bad as they did in eco, but low cost also is something that's kind of a future, it's like a future type of future place. So you saw blue go down there, and it was the second place where they didn't do as well in low cost. But again, we have to look at the financials of where is our what's happening with our investment. So now you're going to see financials here, and there are some team things here that I can't talk about because you're seeing what's going on with the competitors, and you're going, Coach T, wait a minute, this is supposed to be real. We can't see our competitors' finances. Yes, you can. All three of these are publicly traded. We set it that way. We didn't set a recession or a fuel problem. We did set publicly traded for your universe. So you can see all these numbers, which is great. So you can see who's charging what in price uh, for each one of these decisions in each product line, and then you can go product line by product line and see what happened with the investments. And you can also see, especially looking at the cost of goods sold is very important. The unit cost drives a lot, although unit cost alone won't save you. There's places you'll see on the unit cost that each team did really a little bit better in keeping their costs down. But if you're not supplying demand, then you're going to find out that it's a huge problem. When you see the red indicators here, it's meaning it's a flag basically like, hey, what happened with marketing? When you see a marketing appeal of 300%, 100% is ideal, right? You have 100% match. When you have 300%, what it means is you over marketed and over engineered the demand compared to what you could make and supply. So if you want effective marketing, but you want it to be close to 100%. So you can see why blue overspent there. And then red, you can say, well, it depends on the line. So you're going, what happened with red here is because they overmarketed and underproduced, everybody's underwater here in capacity and will be for the next period also. So you have to do some investment there, but watch your cash. All right, let's see. We got to jump to image. I wanted to see image with yellow because they did so well. All right, let's look at now red overpriced this, okay? So you can't really jump that high and get a lot of sales and revenue because what's going to happen is and usually this is reflected in revenue. Where's revenue? Here's revenue right here. Okay, you can see when you overprice like this, you're going to die in revenue, whereas red and blue did okay. I mean, blue and yellow did okay. And this is image, is really yellow did really well. And this is where we should be doing well, image and family. But you cannot overprice. You and can't over engineer and overprice by this much. You could go to 125 maybe, and that works. You can get more profit out of it. But you're going to just take a bath of red ink if you have don't put the amount of both engineering and marketing in that you need at 100% or 110%, and yet you also don't touch plant capacity, and then you raise price. You're going to find that you're killing yourself. So on revenue, of course, which affects an EBIT. Uh, this uh, this actually was our first positive EBIT, as we saw with the big yellow jump there. And so look at the slide and image and study it and see what did yellow do? How did they do everything right, even without having to do a whole lot in plant capacity? Now they could have done better if they hit marketing a little more with a little more capacity, but who complains? They did great. If you're positive EBIT, you're winning. Rose is another question. Almost nobody gets there, even by the end of let me see. Do we have rows here? Yeah. You can see, well, actually, they got into positive rows in this line, which is pretty amazing. For a first decision, hats off to yellow. That's really amazing to get into return on capital because the employment was good. You didn't overemploy. And in fact, what happened, I mean, I don't want to tell stories out of school, but yellow did wait kind of till the end to do image and didn't make a lot of big changes in the sliders. Small changes are really gonna, and you'll see that with the white market line as you do the next decision. So let's see, is this low cost? Yes, it's probably low cost. I looked at eco. So what happened in low cost? Blue especially had an issue. Yeah, we already looked at this. This is because they really over-engineered, but everybody didn't touch the supply very much. Although it's interesting, Red has a good amount of supply there for the next period, and the other two teams are underwater. So you can have You'll have inventories if you have great supply and a lot of plant, but you don't market enough. So let's not forget that equation. If you just leave it alone, don't add marketing dollars, or if you have to take them away like Blue did towards the last minute, and yet you did capacity, then you're going to build inventory like crazy. You've got capacity, but no marketing. So we've already looked at this in terms of portfolio, but it's important to remember the portfolio approach to this. We've already looked at how do we match supply and demand. And so the final issue is where do we all stand versus customers, our customers versus our competitors. And that is our, if you're a niche player, you picked your portfolio. This is straight order stuff. But if you have, and the sim, by the way, was designed, the original sim from, I won't say how many years ago, it was so long ago, when I was at Harvard with Porter. The original Sims we built were on software, and this was the whole driving of all the Sims that have happened. All 300 that, or 255 that Harvard is offering now are still based on this principle because Michael Porter has driven it. He's driven this the whole idea of simulations with this model, which is that if you've got a niche in your portfolio or you're a leader, you're going to have as market share increases, you're going to have high returns. Both of those give you high returns. It's our smiley face. These are price takers here. If you're stuck in the middle, if you have, you're not a niche player, but you're not big enough, there's 100, 300 companies all in there doing the same thing, and you become price takers. Just like Renault that this was based on, this sim was based on them originally. This just happened to them in China, where they are in with a whole bunch of other players, and they're price takers. They have no, I mean, they have huge elasticity. If they change it a little bit, they crash and burn. So elasticity is the elasticity, price elasticity of demand is a little counterintuitive because if you're really elastic, it means you're inelastic on the flip side, which is you've got to be careful about not being able to add even a dollar to the price. So if you're building a demand curve as the third part of the sim goes. The first is, ready, fire, aim, then ready, aim, fire, and then a flywheel, which is if you're building that, then you really see your demand curves and you know where to put the supply curves. LOI is right in the center. So without further ado, that's kind of the recap. It's important that you able to jump around in this site. Let's look at there's the famous two birds, which is really important in terms of if you're really confused how to use the white market lines and how do you do decision two. There's also in decision one, there's a video on how do you do decision two, as well as the 100 slides that show all that. There's this is a really important thing to spend a lot of time on. It's ACE the sim and the class. It shows your capacity, it shows your supply, it shows your demand, it shows how did timing and content work with you doing better. It shows what I was telling you in terms of where should we invest to increase retained earnings and ROAS, uh, capacity versus demand, how do we balance those? All the moving parts in every decision shows you where to go, what to do, how to do the decisions, one versus another. What we told you about supply and demand is here. The 100 slides video with links to it. The important place to go for cheats and tips. It shows you how to download all of the cheat sheets, all the slides that are most important. Shows you the LOIs with many, many more teams involved, up to, Paul might have 20 teams, our team lead, Professor Paul. And so we got a lot of stuff going on there with the other things. This is a real big one from the cheat sheet because it's got what I just showed you, only it shows some of the growth rates initially. These benchmarks usually aren't seen unless you dig way into the videos at Harvard that shows you that eco eventually has a real high, is a question mark, has a high growth rate eventually, as does low costs. And the family line slowly decreases, and yet the image has got some. Now this family line can still do well all the way in. We'll see financials here how they do it. But then how did people jump up in family and become winners and low cost? So this is a lot of things how you have to do decision one, also decision two. Cash flows are so important. This is a whole kind of Bible story about how does CAPAS work in terms of effect of your financing, the cost of capital, and your ratio between cash flows and capex and how important they are. How the things, these are some of the warnings of crash and burn, and there's a whole video on this. And then there's the whole kind of how do decisions work. Um, you integrate the decision cycle with the budget, apt, adapt, decide. And then this is your final paper, really. You have to show what happened and what course directions did you make and how did they work. It's not about did you win or lose, it's how you played the game. Exactly. And these are the three, my chat's going crazy. All right, here's the logbook. Everyone's like, what's the logbook? What's the logbook? The logbook is you download it either on Harvard or it's on two other places within Halo. Yeah, the first annex you all just completed, which is you're putting your basically your sliders. These are the sliders. What did you do? Second one is your strategy. Third is competitor analysis. And that's just for decisions 3, 4, and 5. Decision, periods 6 and 7, your final decision, and then 8 is your paper. There are no decisions. The sim is done by then. So these you need to drop into your Dropbox. I heard there was a problem downloading some of the forms. That's not a problem. You can use the message to message me on your link, or just do a few responses in the questions and the discussion questions. You'll get participation credit. That's why you really need to look at the decisions and put them uh, into the not only CLC boxes, but also the DQs and participation during the week. This is the final kind of point I'll make. This is a whole page on biz485.com that's got to do with capacity compared to inventory, what the formula is, what is the financial and capacity flywheel, how do those work, and a whole discussion on that. So check this out. And this is the main slide of the 100 slides that talk to you how to make your facility investment so you have production capacity. And there's other things in the 100 slide video that I didn't, it's like under 30 minutes. And that link is on the bottom first page here of your own Topaz recap. There's your 100 slides video. Click there, you have it. Here's your Precision 2 video. And then this video, this recap will also be there in case you didn't watch this, but one of your team members said you should watch the recap. Let me stop sharing my screen. That is what I have for your recap today. Thank you so much for taking the time to read it. And there's an Easter egg at the end, like I always give for those people that were nice enough to watch through the whole thing with your busy schedules, which is the real key to all this with lost over inventory and all that is to follow the bouncing white line. You cannot lose if you look, what are the trends with the market? How did your competitors react? And when you see that white line, then you'll be able to, and I'm throwing up graphics in the edit of this so you can kind of see what the white line looks like. And as I mentioned it, you've seen what it looked like, but some of those are from other teams in previous periods because yours really isn't active yet or moving yet, but you will be seeing it in the second decision. And think of the difference between leading and lagging indicators. Where's the trend going, not just where was it? And if it's pointing up, then aim your engineering marketing at going up in that line. If it looks like it's going down, it's starting to decline. And don't forget to look at gas prices per image. On the very first landing page where it shows how you did on everything, on the bottom right, you'll see, I'm trying to throw some graphics up here too. You'll see that fuel price indicator. If it starts to get high, then image is going to have a problem, and that's the time you have to transition more family if you're still supporting them, but definitely to low cost. So that might be by decision 3 or 4. So that's not immediately important. Again, thank you very much. I really appreciate your time, and we'll see you in class. Text me, call me, message me. I've got of of a group of team people. 2 are calling me regularly, sometimes every hour or two. So, and that's great. Please do it. I'm here for you. And this is a different kind of class. This isn't, you never see your professor and you never talk to him. That's how some classes are that are non-traditional or that are online. It's not like that. I'm here for you. I want to see every one of you succeed. And the more you put in, the more you're going to get out of the sim because it really is running a company. Thank you.